Although the cost of crude has been on a downward trajectory since October, it has reversed course somewhat in recent days, with reports of Russian Energy Minister Alexander Novak saying over Christmas that prices could stabilize in the first half of 2019. While some in the market have attributed Novak's optimism largely to joint efforts by OPEC and Russia-led non-OPEC producers to curtail supply by 1.2 million barrels per day, the market to date has not been completely impressed by that move. Equity investors, for example, have been mainly on the losing end of U.S. and Russian energy sector stocks as U.S. supply levels have surged and global demand, notably in China, has been seen as slowing. We're lucky to have with us today Steve Sosnick with Interactive Brokers. He's our chief options strategist, here to give us some further details about the prices of crude oil, potential volatility in the commodity as the year unfolds. Welcome, Steve.
Hi, Steve. How are you doing?
Doing great, doing great. Thank you so much. Thanks so much for coming.
Thank you. Happy New Year.
Happy New Year to you. We're at around $46.75 a barrel in the current crude contract for February. Prices have swung in December, it seems, from under 43 to about 53. This time last year, prices were about 60. And I remember you were a little less bearish than things had actually turned out last year. Can you tell us, what was it that thwarted that outlook at that time? And on that, where do you see prices going this year? And do you think they'll stabilize in the first half?
The problem with any commodity trading, and oil particularly, is that they overshoot. And so you do get to extremes of supply and demand. I think it's partially because of the leveraged nature of futures trading in the product. I think just it tends to be a momentum herds coming and going. And so as a result, it's very hard to establish where the new prices are. Price discovery is a very disjointed process, it seems. And so, did I think it was going to go up? No. Did I think it was going to go down this far, this fast? No. And so I think we do find some levels. I got to think around something with a 4 handle, 40-something, is a level where you'd find some stability. The problem is there's a lot of opaque ideas trending behind the markets. We don't really know how much demand is slowing in China. It seems to be the case, but their economic numbers are usually treated with a big dose of skepticism. We don't really know how much Russia and some of these other OPEC and non-OPEC producers, particularly Saudi Arabia, how committed they are to pumping or not pumping oil at any point. And quite frankly, with the reintroduction of Iranian sanctions unilaterally, and the market still falls off, that tells you a lot about demand. So it's hard to say where that bottom is. It's always dangerous to bottom fish.
In terms of energy sector stocks, do you think that this year those stocks will under or outperform their levels last year?
Outperform their levels of last year. It's hard to do much worse. With this again, if I think that we're sort of nearing some levels where we might find some stability in the underlying crude price. So much depends on where you think crude is going to go. Do I think they can outperform the market? I do think so, because partially they've been such lousy performers relative to the broader market overall. I don't think it would take much in the way of a little bit of a bounce in crude prices to get people moving into a sector that's unloved as the energy sector is.
All right. So overall, you're seeing global demand as being the underpinnings of performance.
Yes, but there's still also the global supply. I mean, I'm hearing that the Texas shale producers and North American shale producers are still out there fracking. It's still profitable, not very profitable, but profitable enough. And these guys have debts to repay, so they got to keep pumping. There's a lot of people who need to pump. Saudi Arabia and a lot of the OPEC countries need to pump oil. Venezuela has nothing else going for it right now except pumping oil. So there's a lot of oil in the system. So it really does become a supply side phenomenon, because it's funny to say that for something that's essentially a finite commodity, that there's too much of it or that there's just too much supply coming. But that, I think, it's really a supply and demand balance, and it's not clear to me that the supply slows down appreciably. And that's, I guess, the one thing that sort of tempers any enthusiasm I have about crude oil prices is it's tough to see the supply turning itself off at a meaningful level without a further reduction in price. And so it becomes a demand story.
Yeah. It's really interesting. And it's It's been a very volatile market. People I'm sure will be looking closely at the numbers.
Of course.
Speaking of which, among other releases in the week ahead, the American Petroleum Institute will be releasing its report on petroleum inventories on Tuesday, followed by the EIA on Wednesday. Steve, thanks so much. It's great having you here, always. I hope you'll be back with us again.
Of course.
Thanks so much for taking the time. It's a busy market. In the meantime, select the event calendar option on the IBKR Trader workstation for a full list of U.S. and global corporate events and earnings, dividend schedules, economic data, IPOs, and more. I'm Steven Levine with Interactive Brokers, asking you to enjoy the week ahead.